Hello, everyone. Good morning, good afternoon, depending on where you are dialing in from. I hope everyone is well today, and thank you for joining. Welcome to this Greenstone webinar on how to measure and report Scope 3 emissions. Obviously, a very key and important topic at the moment, particularly today, as it is Earth Day, and as we're also seeing a number of nations commit to even more ambitious reduction targets, so the UK and the US in the last couple of days, which is really great to see. So because of that, it's even more important that the business community really helps to drive this by accurately looking and accounting their Scope 3 emissions, well, all Scope 3 categories. And over the next 30 minutes, we'll be covering quite a big topic in a pretty short space of time. So we will try to cover as much as possible on Scope 3, the challenges, and how you can start the reporting process. Great. So just to introduce myself firstly, so I am Jake Gill and I head up the client services team at Greenstone, and also very pleased to be joined today by Louise, who is a sustainability consultant in the Greenstone team. And Louise leads a lot of our Scope 3 work, so I'll let Louise introduce herself shortly. But just a bit of housekeeping before we fully get started. We will not be doing a full Q&A session, formal one at the end, just because of time restraints today. But please do still use the GoToWebinar question function, which should be on the right-hand side of your screen on the GoToWebinar panel. So please do still submit questions and we will go through everything at the end and we will then respond directly with questions. And for any useful content across the board, we will look to produce an FAQs document and circulate that, as well as the slides. We will make the slides available to everyone as well afterwards. Before we go through the agenda and get started on the content today, I'm just going to start by giving a bit of a background and overview of us, of Greenstone, for those of you who may not already be familiar with us. So we, Greenstone, provide sustainability software with uncapped support from our team of reporting specialists. And we've been doing that since 2007, and we have three main product areas, which you can see on the screen here. We have a sustainability focused product, Greenstone Enterprise, and that enables complete Scope 1, 2, and 3 emissions reporting in line with the GHG protocol, CDP, and other requirements, and also enables tracking of targets, science-based targets, net zero targets, and other framework reporting, so GRI, CDP, etc. We also then have a supply chain aspect of our product areas, which is Supplier Portal, and that can be used to track the Scope 3 aspects of your emissions and collect primary data from your suppliers, but also risk compliance and other areas of your supply chain management as well. And then finally, Investor Portal is the third area, which you can see on the right-hand side. So that enables the investor community to fully track and manage ESG data across multiple funds and portfolio companies, but can also be used to calculate emissions from investments for Scope 3 reporting as well. So that is us at a high level, and now the agenda for today. So in a moment, I will pass on to Louise, who will take us through these first three sections. So an introduction to Scope 3 emissions, what is driving the requirement for Scope 3 emissions reporting, and also some of the challenges around this area. From there, I will come back and look at how we can start, or how you can start in the Scope 3 reporting journey, and some top tips about that process. And then finally, how we are seeing software being used to accurately measure and report Scope 3 emissions. But before I pass over to Louise, we're going to do the first of two polls today to get your thoughts on, well, get understanding where you are in your process. So here we can see now, do you currently calculate and report your Scope 3 emissions? So yes, we have been reporting for years. Yes, but we've just started the process. Yes, but we don't capture all Scope 3 categories at this stage. So it may just be business travel or waste or water. No, but we are looking to start reporting them. Or no, we are not considering at this stage reporting our Scope 3 emissions. So we'll give everyone a moment just to submit their answers. And this is really useful for us to understand where you all are in that journey. and hopefully we won't see too many people in that last bucket. But let's have a look at the results if they are now ready. Here we go. Okay, great. So quite a good mixture of people in the different options, but definitely the main chunk of people, 38% in that middle one. So, and that's what we would expect. That's where most people are. So you are reporting maybe some of the core categories, business travel, waste, water perhaps, but not the wider options. So that's great to hear. And as we go through the content today, we'll have a look at some of those wider categories and how we can help in that space. Perfect. So with that, I will pause and I'll hand over to Louise to take you through the next few sections. So Louise, over to you.
Great. Thank you, Jake. Hello, everyone. My name is Louise. I'm a sustainability consultant here at Greenstone. And today I will take you through the quite complex but actually fascinating world of Scope 3 emissions. So I will start by touching on the basics of greenhouse gases reporting. Without going into much details, let's just dive into the GHG protocol diagram. So the Greenhouse Gas Protocol has classified greenhouse gases emissions in 3 categories, also called scopes, in order to unify the reporting and accounting of emissions worldwide. So Scope 1 that we have in the middle here covers all direct emissions from owned or controlled operations. This will relate to emission sources that the business has direct control over, such as energy consumption, combustion, fuels, or vehicles. Scope 2, which we have at the top left, covers indirect emissions from the generation of purchased electricity, steam, heating, or cooling consumed by the company. And Scope 3, which is why we're here today, is the most complex and detailed scope. It covers all other indirect emissions occurring from the company's value chain, meaning that the emissions are out of the company operational control. Most importantly, as Scope 3 emissions are the result of activities from assets not owned or controlled by the company, one company's Scope 3 emissions originate from another company's Scope 1 or Scope 3 emissions, which makes it even harder to understand, account, and reduce these emissions, essentially. So Scope 3 emissions are split between 15 categories. And those 15 categories are themselves organized in 2 types of emissions, whether they are upstream in the value chain or if they are downstream in the value chain. So please note that not all categories will be relevant to you, to any business organization, and it is crucial to determine the reporting boundaries first. The categories can be flexible depending on the nature of the reporting organization. For example, this year with the impact of COVID, we've been seeing some working from home emissions currently being recorded under employee commuting, for example, so in the upstream category. In terms of the traditional approach that we've been having, traditionally attention had been given on Scope 1 and Scope 2 emissions, as they remain relatively simple to understand and data is readily available. You can, for example, use your electricity invoice. Not only Scope 1 and Scope 2 data collection is easy, but acting to reduce the emissions is also fairly easy. A company can decide to switch to less emitting fuel, or they can switch to renewable energies. However, forcing a supplier outside of operational control to reduce emission is much more difficult, which has essentially left Scope 3 emissions in the shadow of Scope 1 and Scope 2 for too long. However, historically disregarded, it is said that they account for the majority of a company's greenhouse gases emissions. For instance, Apple Scope 3 emissions account for 99% of their total emissions, and for Samsung, they account for about 61% of their total emissions. The graph that we have here is from MSCI, an American finance company, and it's showing us that for an average investment company as of July 2020, Scope 3 carbon emission intensity was higher than Scope 1 and Scope 2 combined, which makes it very essential to look at Scope 3 emissions now. So essentially, what is driving the rise in Scope 3 emissions reporting? Well, there's many reasons for that. And the first one that I will touch upon is emission reduction targets. So in order to align with the Paris Agreement and to reach the commitment to curb global temperatures rise to well below 2 degrees, global greenhouse gases emissions need to be cut in half by 2030, as we've seen the US committing today. And they also need to drop to net zero by 2050. this is absolutely unachievable if companies are not fully aware of their total emissions, including amongst the value chains. Emissions reduction strategies and target setting are now best practice, and they're mostly very popular across all sectors. So let's have a look at the most popular ones. First one, science-based targets, that were referred to also as SBTs, provide a reduction path for companies to align with the Paris Agreement, targeting all scopes of emissions. Every day, more and more companies are committing to SBTs, and we count more than 1,300 companies having set targets, whilst more than 650 companies have had their targets verified. Science-based targets must cover Scope 1 and Scope 2. And for companies whose Scope 3 emissions cover more than 40% of the combined Scope 1, 2, and 3, targets must cover Scope 3 as well. So needless to say that this covers quite a big share of companies. Moreover, all companies involved in the sale or distribution of natural gas or other fossil fuel products have to set science-based targets with their Scope 3 targets as well. In order to address relevant upstream categories, companies may engage with their suppliers, and they can ask them to set science-based targets themselves as well. So essentially, Scope 3 reduction targets is in fact creating a virtuous circle, as they allow many actors to take bold and ambitious climate actions. One thing to note is that SBTs are highly regulated, and they need to be verified in order to be validated, making it nearly legally binding to calculate Scope 3 emissions for an accurate target. The second strategy would be net zero targets as well. They are also driving the disclosure of Scope 3 emissions, as in order to achieve a net zero emissions world by 2050, having visibility of all emissions is inevitable. Indeed, net zero targets boundaries must cover all scopes, so 1, 2, and 3. Reaching a state of net zero emissions for companies implies both achieving reduction in value chain emissions in alignment with the Paris Agreement, and in second time, neutralizing any source of residual emissions by permanently removing or offsetting the equivalent amount of atmospheric CO2. So all in all, net zero targets are based on a 1.5 reduction science-based targets, and then carbon offsetting or removal. But the key takeaway from this is that ultimately, the first step for a company when setting targets, whether it is science-based or net zero, is to conduct a deep scope screening to determine where the emissions are, where they are the highest, and for that one cannot exclude looking at Scope 3 emissions. Another reason that's driving Scope 3 reporting is the international frameworks. So hand in hand, international reporting frameworks such as CDP here have boosted the requirements for Scope 3 disclosure, encouraging companies to be fully aware of all their emissions, even the most complex ones. This year's questionnaire notably has an emphasis on science-based and net zero targets with a slightly higher score than before, especially if the target covers Scope 3 emissions. What we have here is a snapshot of the CDP questionnaire 2021, which asks for a deep and in-depth reporting of Scope 3 emissions amongst the different categories that we've been seeing before. Other international frameworks, such as the GRI standards, also ask for companies to disclose Scope 3 emissions. So as we have here, disclosure 305 number 3 is asking for the gross indirect Scope 3 GHG emissions. So in general, it is best practice to non-financially report to the major international and national frameworks. And we have also witnessed a growth of Scope 3 disclosures in internal ESG reports from companies worldwide. Talking of ESG, here we have the increase of PRI, so Principle for Responsible Investing growth, and we can see that this increase is telling us that the trend is expected to keep on growing, really, so that even in the investment world, Scope 3 is becoming a topic. Right, I will not touch upon the challenges of measuring and reporting Scope 3 emissions, because starting your journey to measure and report Scope 3 emissions can be quite difficult, and there are a lot of hurdles that are very specific to each and every company's and organizations. But Jake, my colleague, will touch upon how software can help to overcome them. First, let's have a look at the most common challenges that companies may be facing when kicking off Scope 3 reporting. The first one would be reliance on external organizations. As Scope 3 emissions and data lie mostly within the supply chain, data is in the hands of external stakeholders. They might not have the data you need, they might not have started to report or to account their own emissions as well, or they might simply not want to provide the data. Luckily, the Greenhouse Gas Protocol data collection methodology has all scenarios covered, and benchmark values can be used as well, and estimations. Secondly, the fact that the data mainly lays outside of the company's operational control makes the reliability of the data more difficult to manage. If a supplier confirms that a specific activity or a product equals a certain amount of CO2, the only way to verify this is to have access to the methodology or have access to primary data. However, not all categories are outside of a company's operational control, and the companies can still manage some of the data collection internally, such as when it comes to in-house commuting or traveling data. Once the data has been collected, it needs to be calculated and multiplied by the relevant emission factor. Some suppliers may have some product or activity specific emission factors. For example, one product equals X amount of emissions. But if that's not the case, the calculation process can be quite a difficult exercise. But there are solutions out there to smooth that process. Next, reaching out to all suppliers. Value chains are quite complex, and reaching out to all the relevant suppliers can be a daunting task. But fortunately, Jake will cover how we can help in that regard later. Another important obstacle is that the data to cover is much wider and larger than for Scope 1 and Scope 2. For a reminder, we're talking about 15 different categories of data here. Luckily, not all 15 categories will apply, and one key step is to understand the relevance of each category and how they are applicable to you. Indeed, there is no one-size-fits-all approach to Scope 3 emissions, which can be, on the other hand, quite complicated as companies need to be fully aware of their own boundaries first. Lastly, one challenge that we have identified from experience is that there is often a fine line between whether the data should lie in Scope 1, in Scope 2, or in Scope 3 categories. For example, you have company cars. Company cars fall into Scope 1 as they are within the company's operational boundaries and the company has direct control over the usage of those cars. If the company is looking at reporting employee commuting, so category 7 of Scope 3, they must make sure to not include the employees that are commuting with company cars. So it can be quite complex to draw the line, but it is quite key to understand fully where that line is in order to not double count the emissions. So hopefully I've covered most of the challenges that you may face, but I will now hand over back to Jake, who will run a quick poll about the challenges that you have may face yourself.
Thank you very much, Louise. That was really interesting and some great points in there, and I hope everyone found that a very useful overview of Scope 3 reporting, some of the background on it, the drivers, and some of the challenges in this area as well. But yes, as Louise just mentioned, we would now really like to hear from you in terms of what you think the biggest challenges are when it comes to Scope 3 reporting and the emissions process. So you can see this on the screen here. For you, is it relating the Scope 3 categories to your organization? Is it engaging with stakeholders, finding the right emission factor for calculation? Is it availability of Scope 3 category data or reliability of Scope 3 category data? So again, we'll give everyone a moment to submit their answers, and I'll be touching on some of these points as we go through the next section. So yeah, very useful to understand what all of your views are today and what you see the biggest challenges are alongside the points Louise went through. Okay, hopefully everyone has had a chance to put in their answer, and let's have a look at the results if they are ready. Okay, so again, quite a mixture of options there. So yeah, the clear winner though is definitely availability of scope 3 category data, which is, yeah, for sure a key one. But it's interesting that we've got a mixture across those different ones, and that definitely backs up the difficulty and the almost daunting part of it when it comes to scope 3 reporting. But yes, let's now have a look at how we can start the journey or start the process around wider scope 3 reporting, and hopefully touch on some of those points and give you some good tips about how to go through that process. So yes, in this next section, as I just said, we will look at where to start in the scope 3 reporting journey. Even though it's saying where to start, this is still relevant for not just first timers of doing wider scope 3 reporting. It's also very true and very applicable to experienced ones as well. So just to point that out before we move on to this section. So here we go. So yeah, where to start? The first point here, and this should always be the starting point when it comes to calculating scope 3 emissions or any emissions, and that's understanding and assessing your current data collection and reporting process. So which scope 1, 2, and 3 categories are we currently reporting, if any? And you know, scope 1 and 2, as Louise touched on, has been a main focus area for a long time now, and generally speaking, companies have a fairly good grip on these areas. And as we saw from the poll, the first poll, and a lot of you guys today, a lot of companies are already reporting on some of the scope 3 categories, sometimes termed the core scope 3 categories. So business travel, waste, water, for example, the ones you have more control over and visibility of. So it's important to assess this to start with, to fully understand where you are, what your starting point is, and where the current gaps are. It's also important to assess data coverage and quality as well. So for those current categories that you are collecting, what is the coverage of data that you've got, and what is the quality? So where are the gaps? Where are you relying on estimations and all of that? So coverage and quality, these are key metrics that should be tracked for all emission scopes over time, and knowing this will really show you where the improvement opportunities are. So the second point here is to utilize guidance and resources. So as we have seen and touched on, scope 3 reporting, full scope 3 reporting, complete scope 3 reporting can be a big undertaking. It can be a complex process to go through. But there are resources out there to help you go through this, so definitely utilize those. I've listed just 4 there. Obviously, the top 2, the GHG protocol, corporate value chain, scope 3 standard, and a technical guidance for calculating scope 3 emissions. Those are key ones, but also the scope 3 inventory guidance from the EPA, and also the best practices in scope 3 management from SBTi, so the Science Based Target Initiative. They're all very long and detailed documents, but they are super helpful. So it is definitely worth spending the time going through those, maybe just for the specific categories that you are going to be focusing on and looking at. So it is worth spending the time going through the available resources and documents out there that can help you with this process. Just to note, those are just a sample of the resources out there. There are many more, so do utilize and look for those where they are available. This next one is a big one. It's an important one, assessing the relevance of the 15 GHG scope 3 categories to your organization. And this is something that Louise has touched on earlier on. So 15 categories, that is a lot. It's a number of categories to consider. So firstly, some of them, as we've touched on, may not be relevant at all to you, an organization. And for the others, it's important to focus on the material impact areas for your organization. But how do we go about this and start that? Well, it's important to firstly undertake an initial screening exercise to identify where the hotspots are in your value chain and your organization. And there are many ways of doing that. It can be a very detailed process. You can do it at quite a high level to start with. So one example, one way of doing that would be to review sector case studies and best practices in your area. So, looking at what other companies are focusing on in your space will not necessarily mean it's the same and exact same for you. but it should give you a good starting point and a good idea of the likely focus areas that you're going to need to look at. The other method is using screening tools which are available. So for example, the GHG protocol and Qantas Scope 3 evaluator. So this allows you to plug in high-level data relating to Scope 3 and your organization. It's not designed to be fully comprehensive or the most robust Scope 3 calculations, so it's not typically something you'd want to rely on for your reporting, but it is useful for this initial screening stage. And once you've gone through that process, you should have a good understanding of your own hotspots, your own focus areas, and you can then map material categories across your value chain. So that's that last sub point there. So for each category, who is involved? Suppliers, customers, which ones? And then the final point here is then to plan your data collection methods and calculation approaches. So at this point, we should have a clear breakdown of our relevant Scope 3 categories. And within those hotspots, we know who the key players are who need to be engaged with. So from here, we can really plan out our collection and calculation strategy. And it is very important to plan this because there's a lot of moving parts, a lot of elements within this whole process. So the plan should include primary data versus estimations. So where we're going to aim to get actual primary data from the external organizations, suppliers, customers, investors, for example, and where is that not reasonable to do, is that not appropriate, and where are we going to need to rely on estimations and high-level methods. From there, which emission factors are we going to use? So this is something that Louise has touched on. It's going to be a combination of national location-based methods, supplier-specific emission factors, and where we need to maybe supply chain spend, EEIO, as well as LCA, so life cycle assessment factors as well, if relevant. So these selections will depend on the Scope 3 category and the data you are able to collect, but also on you as a company. So if you produce products, for example, then there'll be a greater reliance on LCA portions within the process in comparison to office-based professional services organizations, for example. This point on emission factors is a whole topic within itself, and we're not going to go into too much more detail on this here today, but please do reach out if you want to discuss this further and have any questions. And also use the resources I mentioned earlier in this area, because there's definitely some very useful content on that whole side of thing in those areas. And then the last point there is to use a system to fully manage the data collection process. So as we touched on, there are a lot of steps involved, a lot of parties involved, a lot of emission factors to use. Using a system to help automate the process as much as possible will really make your life a lot simpler. So to wrap up this section of where to start, I have a few top tips to consider as you go through this process for Scope 3 reporting. So firstly, be strategic in your engagement selections. So yeah, this is key. Focus on, for example, tier 1 core suppliers, the ones that represent the biggest impact areas. Next, keep the engagement simple. Do not overcomplicate the request for information when you're relying on external organizations. Organizations get a lot of requests these days, so make sure you're getting the right information, but it's done in the most simple way possible. Consider emissions from events, the next point. So perhaps not in the past year or so, but if you are a company that usually runs your own events, then it's important to include that, as this is often a forgotten aspect of Scope 3. Ensure alignment with frameworks. Again, relating back to Louise's point earlier, it's important to make sure what you're doing relates to your relevant frameworks and requirements. And then the overall point here is work towards coverage and quality. So Scope 3 reporting should be seen as a journey. It's not reasonable to expect to have complete coverage of data and all primary information year one. You need to be working towards that over time and realizing that it is a journey and you can always improve and get more and more information as you go through this. Great, so the final section, which I'll go through at a fairly high level, is just to touch on how we see at Greenstone, our clients utilize software to accurately measure and report Scope 3 emissions. So here we can see the Greenstone solutions. So just a brief overview, we have Greenstone Enterprise, which enables the complete scope 1, 2, and 3 calculations, and users can upload data from any category and automate that calculation process. So if you already have a good grip of the data, you can use that to calculate complete scope 1, 2, and 3 emissions. But then we also have the supplier portal, investor portal, complementary tools that can be used to collect primary data from those external organizations. So we have simple carbon emissions wizards, what we call wizards, that then collect the data in a very simple, streamlined way. So the suppliers, the companies can complete that data, calculate their own scope 1, 2, and 3 information, and then that would automatically push through the relevant parts to your own company footprint for the complete scope 1, 2, and 3 reporting. And that's all based on the central Greenstone emissions calculation engine to do that in a robust way. So the overall point is having that central system just simplifies it, makes it easier to manage, and ensures that you don't miss any key areas of the process. And just a couple of screenshots now. So this is the Scope 3 category dashboard from the enterprise solution, where we can see all of our data, whether that's based on estimations, primary data, whatever it is, all feeding through to the different Scope 3 categories. And then here, very quickly, we have a few screenshots of the other solutions, so supplier portal and investor portal, where we can see how those external organizations can complete their information, calculate their emissions, and then push their information through to you in a robust but still a simple way of doing it. So I won't go into too much more detail on those areas now, but yeah, please do get in touch if you do have any questions on any of that. But yes, with that, I will wrap up the webinar. So thank you to Louise and thank you to all of you attendees for joining today. Yeah, as we mentioned, this is a big topic to cover in a short space of time. So we will go through the questions that have been put in so far. Thank you for those of you who have completed or submitted questions. If you have anything else you want to discuss further, please do get in touch. It would be great to connect and talk through it in more detail. But yeah, with that, we will wrap up. Thank you everyone for joining, and yeah, enjoy the rest of your day and week.
Thank you, everyone.